Ladies and gentlemen, welcome back to the channel. We have quite the video for all of you guys that are watching this video. This week could be another crazy one. We're going to break it down exactly what I expect here in the markets this upcoming week and what you need to know for AMC stock, and it could be quite bullish. So that's what I'm going to leave you on, a little bit of a cliffhanger. You guys definitely don't want to miss this one. Hit the like button, subscribe to the channel, and source your comments, questions, and or concerns down below in the comment section. Now, first thing I want to start with here is a little bit of a warning, okay? So what the Fed did recently is they basically confirmed the market's worst fears, that even if inflation continues to fall, continues to go down, and gets down to their target, if the economy is still growing at a robust pace, like the Atlanta Fed GDP Now tracker is expecting around 3% GDP, then we're not going to get rate cuts. We're going to get more rate hikes. The Fed wants to break the economy to some degree. I don't think they want a deep recession, but they need maybe a shallow recession to really crush inflation expectations. So what this is doing right now, why I'm saying this, is any of the economic data that we get that is important, that shows us how the economy is doing, is going to be reacted upon. So, for an example, if we start to get really bad economic data, it's possible you could get emergency rate cuts. It's possible that the markets have a delirious expectation of the economy and where Q3 is. And some of the data reports this week could give you kind of more clarity on what's happening in the economy. On the other hand, if the economy continues to perform, continues to do well, that could also be very negative, because the Fed is going to be a lot more likely to raise rates again this year, in which that's what they're actually forecasting is one more rate increase. And then the Fed might say, hey, we're not even going to cut rates at all in 2024. They might say, hey, we need to raise rates further. And markets obviously are not going to like that one as well. So there's really, over the next couple of months, I don't see a good outcome here just because of what the Fed is doing. There's really no good outcome. Question is, do you collapse now or do you collapse later? That's the ultimate question. Now, who knows how this affects AMC? Who knows how it's going to affect your portfolio? What I will tell you is the 38th and the 39th week of the year are historically your worst weeks of the year. That usually, once you get into a new fiscal year, you can get a lot of bullish positioning. Now, I don't expect the indexes to be really bullish. You're probably in a range-bound market for quite a number of years, I would imagine. But certain stocks, certain sectors can do well. Now, if we do go into a period of low economic growth, in which that's basically what you're expecting over the next couple of years, your high growth stocks can do very well. Stocks that have gotten beaten down in 2023 likely do pretty well. This is fiscal year 2024, starting on Monday, starting tomorrow. So you could see a lot of positioning in stocks like AMC, stocks like a Tesla, stocks like a SoFi or a Fubo. You've seen those stocks do relatively well on Friday. You've seen a lot of those stocks just doing well over the past couple of days, and a lot of that has to do with positioning for 2024. I think a lot of people want to be in those beaten down stocks heading into 2024, and AMC fits that category quite well, with the obvious potential to see a short squeeze and rally to ridiculously high prices. Let's be honest. Like when AMC does go through the MOS, it could be insane. So I have a little bit more bullish expectations for this week for certain stocks and certain sectors. Pretty dang bullish on AMC stock in particular this week. Now let's run through some of the major data coming out this week. On Monday, you're going to have ISM Manufacturing PMI. This is something that the markets pay very close attention to. That comes out at 10 a.m. You're expecting 47.7, so a slight improvement from last month's number of 47.6. Again, if this were to just utterly collapse or something, that would not be great. And then at 10 a.m. or 11 a.m. on Monday, you're going to have a speech from Fed Jerome Powell, a speech from Fed Barr at 1 p.m. and at 1:30 p.m. you're going to have Fed Williams. At 7:30 p.m. you're going to have Fed Mester. So keep that in mind. Couple voters there. Fed Bostic will speak at 8 a.m. on Tuesday. And then at 10 a.m., you're going to get the JOLTS job openings. Now, this is important because the lower the better, obviously. That's taking the pressure off of the labor market. You're expecting 8.83 million. Last month's number was 8.827 million. So you're actually expecting more job openings this month compared to last month. So definitely keep that on your radar, as well as the quits number. You're expecting 3.4 million. Last month's number was 3.55 million. So you're expecting less quits as well. So little bit stronger labor market than we had last month. Now, on Wednesday, you're going to get ISM Services PMI. This could be very important. You're expecting 53.6. Last month's reading was 54.5. So you're expecting these services to have actually decreased for the first time in quite a long time. Then you're also going to get factory orders month over month, expecting that at positive 0.3%. Last month's reading was negative 2.1%. So across the board, you're really expecting a decent economy with services slowing down, which normally would be great for a market, but in this market, when the Fed is pretty delusional, then all bets are off. On Thursday, you're not really going to get anything too crazy. Couple Fed speakers, some bond auctions, initial jobless claims coming out. You're expecting that to increase to 210,000. I do expect at some point the UAW strike and all of that, the unemployment that's going out there to a lot of people, will start to hit the numbers. I don't know when that will be, but I expect that it will happen. Now, on Friday, that's your big data report. You're going to get non-farm payrolls. You're expecting 163,000. So this would be, a very low number relative to what we have gotten before. But, I mean, back here in June, you only added 105,000 jobs. Like, these numbers keep getting revised down. So we've reacted, good and bad to certain reports, but I mean, the report that we got 3 months ago was not great. At the time, it looked a lot better. So we're also going to get more revisions for these previous months, and you could get revised down quite a bit. Now, unfortunately, if non-farm payrolls do drop more than expectations, the unemployment rate does go higher than expectations, that's probably not a great thing for the markets, because the markets are going to say, hey, we're closer to a recession than we previously thought. Now, the unemployment rate is expected at 3.7%. Last month's reading was 3.8%. That really broke you out of a one-year high. If that number comes in higher than 3.8%, well, again, that could be very, very negative for our market. So this data has big implications for the broader indexes, I believe. I don't think, like I said, your stocks have gotten beaten down. Your high quality dog names over the past 2 years probably going to catch quite the bid here this week as positioning increases in those stocks for full year 2024. Now, like we said in the last video as well, if you look at the option activity, it is totally starting to flip. There is a lot more calls now basically for the foreseeable future on all of these expirations, which is a lot different than what we've seen recently. This week, you have calls in the money of 7,500, calls out the money 44,000, puts in the money 11,500, puts out the money about 20,000. So about a 2-to-1 ratio here for the put to call ratio over the next couple of months here. And like we said in the beginning of this video, the government shutdown crisis has been averted. So that could be pretty good for markets as well coming on Monday, as long as Fed Jerome Powell does not scare the markets with his speech. I believe we said 10 a.m. on Monday. It could be a pretty good at least start to the week. I think some of the economic data is obviously going to dictate how the markets do move. You also want to watch oil to see if oil continues to fall. That's going to give you more of an upside kind of pressure to the markets, which I would expect would have a very positive effect on AMC stock. You also want to watch the bond yields. Bond yields have been coming down off of their highs over the past couple of days. That has also given the markets room to see a little bit of a bounce. But if we get strong economic data, bond yields are going higher, oil's going higher, the dollar's going higher, that's not going to be great for our markets. Now let's run through this Ortex data here. You have a $173 million worth of short positions, 11.18% short interest of free float. Free float out on loan at about 14%, 27.25 million shares currently out on loan. Days to cover 1.9, cost to borrow 3.59%, utilization of 60%. So you never really know what these numbers are. Let's be honest here. Last we knew you had about 22.15 million shares sold short, the highest levels that we have been at in a very long time. I mean, you've never been this short. But again, it's still a big question. Did retail investors buy the 40 million shares AMC just issued, or did that just go to more shorts? It looks like maybe a little bit of both. So if you think about it like that, if retail investors just bought those shares, then your float is really low. Your short interest could be way higher than 11% here if 80% of retail still owns 80% of AMC stock. Or more, potentially. Maybe a little bit less or more. It really doesn't matter. You're still very much constricting the float at that point. So even 11% short interest could really be 40-50% short interest if retail investors still own the bulk of AMC shares out there. And like we said with the option activity, put to call ratio is really starting to fall off a cliff. So what you've seen before when the put to call ratio was low, AMC stock could go through very violent up moves, and when it put to call ratio was really high, you just did not see any of those multi-100% runs. This, I think, is one of the things you need to keep on your radar, especially heading for the next couple of weeks. This tells me that we probably get quite the run here relatively soon for AMC stock. Now, if we actually take a look at AMC stock on a technical basis, we broke this down a little bit more in the last video, but you have a lot of bullish indicators going for AMC stock. AMC is above the 8-day moving average. The MACD has been trending in the right direction for a long time, and the RSI just went above 30 at 30.58. So all of these are great signs. If you can get above $10 per share, that's where things get a little bit crazy, and then you could reach as high as about $45. That would be the higher end level to the this technical chart we put on here in the last video. If you get above 10, you can run to about 45. I would say maybe somewhere in the middle, maybe like 25, and that would still be reasonable. The valuation would be very reasonable at that point. The 50-day moving average is $23.63. So I'm not going to sit here and say this next week is going to be this crazy week where AMC stock rallies hundreds of percents. I think you need to some degree some kind of good news to see a run like that. But I do expect a very strong week this week. I do think AMC stock could easily reach the low to mid-teens this week if things do go well, if you see a lot of inflows heading into AMC stock and a lot of bullish positioning. So that's kind of what I'm expecting for this week. Again, you want to watch bond yields, you want to watch oil. When bond yields go higher, bond prices fall. This is putting a lot of pressure on your regional banks, and regional banks, the regional bank ETF has been falling quite a bit recently as well. USO, oil, has been rising. That is not exactly the greatest thing. And the dollar as well has started to rise quite a bit recently. If the dollar continues higher, that's not going to be great for company earnings and valuations for stocks as well. So a couple worrisome things, but overall pretty dang positive heading into this week for AMC stock, guys. So that is going to go ahead and do it for this video. Hit that like button, subscribe to the channel, and source your comments, questions, or concerns down below in the comment section. Let me know what you think AMC stock is going to do in this upcoming week. Thank you for watching. Enjoy the rest of your day, and I will see you in the next one.